If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. In today's episode, we've got some pretty interesting things to talk about, from NIO to Xiaomi. It's going to get super insightful in this episode. We're going to be doubling down on the acquisition rumor that we spoke about and talking about Tesla's success with the new Model Y. So if you're new to the channel, you already know what to do. Hit that subscribe button. We're trying to get to 10,000 subscribers. That's our goal for this year. Pretty soon, we're going to hit 8,000 subscribers. Make sure you hit the like button. Make sure you click the notification bell icon. Leave a comment down below. All your engagement really does help all the research and work that we put in reach a broader audience so that we can help more people. So I thank you guys for that. You guys have been amazing. The support is overwhelming. But anyways, without further ado, let's get into today's episode of the Courtside Financial Podcast. Before we jump in, quick disclaimer. Of course, many of you who are returning to the channel already know that I'm a NIO bull. I'm bullish on NIO. I'm invested in NIO. Never try to give financial advice. My objective here is, sorry to use the word twice, just to be as objective as possible, to tell all sides of the story. View this channel as a news channel, view myself as a reporter, try to sprinkle in a dash of analysis here and there as well, and really get you thinking. So that's the purpose of today's episode, just to tell multiple sides of the story. In just the first 15 days of 2025, Tesla had secured 79,000 orders in China, with 59K of those being the Tesla Model Y. Now, here's why it gets particularly interesting. Tesla had increased the price of the Model Y by 13,000 yuan, bringing it to 2,063,500 yuan. And here's the thing, people are still placing these orders without even seeing the car in person. When I first saw these numbers, I had to double check because I wasn't sure if they were real or not. Let's break down what's new with the revamped Model Y, because it tells a story about where the market is heading. The battery efficiency improvements are significant, from 11.9 to 12.4 kilowatt hours per 100 kilometers. Range has increased by 30 to 40 kilometers, and the high-end model now reaches 719 kilometers on a single charge. They've also made some comprehensive improvements to suspension, quietness, and intelligent driving. But here's what's really fascinating. Tesla didn't make any really earth-shattering technological upgrade. They just optimized various aspects of the vehicle. It's kind of like the iPhone strategy. Incremental improvements that add up to even more compelling package. Now let's shift gears and talk about what's happening with joint ventures, because this provides crucial context for our story today. The numbers are staggering here, and they tell a story about industry transformation. Joint venture brands' market share has collapsed 27.5% in 2024. Just 5 years ago, they controlled 50% of the market. In the luxury segment, traditional leaders like BMW, Benz, Audi have all seen their market share fall around 12%. And lastly, most joint ventures saw declines ranging from 2% all the way up to 40% in 2024. Think about this. We're watching decades of market dominance unravel in real time. The only joint venture brand that met its sales target in 2024 was Toyota, and they just barely met it by 181 vehicles. This brings us to what I think is the most fascinating story in the EV market right now, all the speculation about Xiaomi potentially acquiring NIO. And as I mentioned in my previous video, this deal could make more strategic sense than many may realize. And so I want to take this opportunity to expand on my analysis. First, let's take a look at Xiaomi's position, because it becomes crucial to understanding this situation. Their cash reserves reached a record high of 151.6 billion yuan. They're projecting 300,000 vehicle deliveries in 2025 alone, and they've reduced their vehicle losses from 60,000 yuan to about 37,700 yuan. Now, Goldman Sachs even predicts that they'll be profitable by 2028. Now, here's where it gets interesting. When I talked about this in our previous episode, I mentioned NIO's battery swapping network. I mentioned that it spans over 700 cities and could be a game changer for Xiaomi. I also said that it could be like the eBay PayPal acquisition. Sometimes the underlying infrastructure is worth more than the primary business. Remember that? But there's more to this story. According to recent reports, Li Jun, Xiaomi's founder, has explicitly stated that they won't take any shortcuts or make any acquisitions. They're more focused on core technology and are willing to invest 10 times more to make sure that they're building cars properly. This contradicts the acquisitions speculation, but let's think about this strategically. NIO's position is pretty unique. They've got 42.2 billion yuan in cash. They have over 20,000 charging piles, nearly 30,000 battery swapping stations, 40% of the market in high-end pure electric vehicles, nearly 9,300 technical patents, and a cumulative sales of over 600,000 vehicles. What's particularly interesting, as I mentioned as well, is NIO's sub-brand strategy. They now have 3 brands and 11 models covering different price ranges from 150,000 yuan to 800,000 yuan. In a market heading towards consolidation, diversification isn't just smart, it's essentially survival. Again, it reminds me of the dot-com bubble. The survivors were the ones with real business models and multiple revenue streams. Looking at the broader market context, China's auto market is expected to hit 23.4 million vehicles in 2025. New energy vehicles are going to make up 57% of that. The pure electric vehicle market growth has slowed to 15.5%, and plug-in hybrids are growing at 71.6%. This brings us to a crucial question that we ask in almost every episode. What does this mean for the broader industry? For Tesla, they've proven that brand power still matters enormously. Their strategy of incremental improvements is working, and they still have pricing power due to their dominance in the market. For joint ventures, the window for transformation is closing. Those without strong new energy strategies are at risk, and we're obviously likely to see more exits from the Chinese EV market. For NIO, their infrastructure bet is paying off. Their multi-brand strategy is providing resilience, and Li Bin's target of profitability by 2026 is crucial. For Xiaomi, they're showing impressive execution capability. Their cash position gives them options. And the question to me isn't if they'll succeed, but how big they'll become. What makes this moment in the auto industry so fascinating is that we're seeing multiple transformations happening simultaneously. The shift from ICE to electric, the integration of tech and auto manufacturing, the rise of Chinese brands, and the potential restructuring of industry relationships. Anyways, that's all for today's episode of the Courtside Financial Podcast. I hope you guys found this episode valuable, insightful, useful, at the very least entertaining. If it was any of those things for you, make sure you hit the like button, hit the subscribe button, help us get to 8K and then 10K. Click the notification bell icon, leave a comment down below, share the video. All that stuff really does go a long way in helping out the channel. And yeah, we just appreciate you guys. Happy Monday, happy Martin Luther King Day. We will see you in the next installment of the Courtside Financial Podcast. This is Obi signing off. Thanks for watching.